Absolutely. Going to talk a little bit of CRM. It was the big red on the board today, down 9% is the last we had looked at it. And yeah, I still see it about 9.3% as you can see behind me. Now, not every trade is going to be a bit of a winner. It was a mixed report. Now, everyone's going to be focused on the guidance, and rightfully should be, because the guidance was a disappointment. They did beat on EPS, although if you adjusted, it wasn't quite as big of a bid. But the key thing for me here today, and show you why I like the dip buy, or at least the long opportunity, trying to find a bottom when it was down this far, is I mean, you already had a significant pullback from this 300 highs. You were right down into this like 260, 265 area overnight. If you look at the post-market action, and we're right to this 266 previous support level. So I had that sort of pegged off, and then of course yesterday you did have that 64 bottom in the aftermarket. So those are the two levels that I was looking at for the dip buy. Came in the pre-market, and immediately we're sort of bouncing off of both of these, and we're already heading towards the open. So I had to be a little bit patient. And this is one of those situations where a lot of times you've already made the move off of a level, so maybe I shouldn't have chased back into it. That's something I got to consider next time. But what happened at the open, you tested higher, and then we start dipping in, and I'll get back to that test higher and dip down in just a little bit. First part of the trade, no problems. That 266 level, I allow it to bounce off that support. Once it does, I take it the third time through, technically, off that level, and then just look to play it inside of the range. At that point, we get a couple dollars worth of a scalp trade, and I'm just looking to hold for the retest of the top at about 275. So at that point, things looked pretty good. However, we took a turn for the worse through the bottom. Now, in this case, we do not stop ourselves out saying, okay, now we already got some profits. Let's hold the rest down towards that 264 level where we can re-up. These are two separate levels for two separate trades, right? So what should have probably happened here is just get it out when it breaks this level and then re-engage down in front of 264. And if that breaks, fine. Bob's your uncle, you walk away from it. That's one mistake. The second mistake that got made here was, well, look what happens after it makes that wipeout bottom. It reestablishes the 264 level, essentially for that scalp trade. So when things settle down, it did give a re-entry opportunity. And the whole point of buying the dip, when you think something is oversold, especially after earnings, is to allow it to settle down. So that's a couple of things I did wrong. Almost the bigger issue, I think, for myself, because I like a specific short setup, and it is that failed breakout at the open and then rejection. That's exactly what happened here at 275. And when that move happens, a lot of times I'm thinking the stock becomes a short. And if I'm thinking that, then maybe I should temper my expectations for a dip buy on the long. So a lot of things I could have looked at there. If something shows up as a sort of like an A+, like a technical setup for you to the short side, maybe you don't like the long as much. That's one thing I could have certainly done better here. The only good thing was I did limit the losses in taking out that bottom stop, but should have looked to get back into it. Now, obviously, you're having the market make another push to the downside late here, so I'm not sure there's going to be another trade in CRM, but got to go over the winners and the losers when we talk about how we can get better as a trader, and that's why I wanted to review CRM today.